Welcome to Alpha Recap, your daily wrap of the market moves and what they really mean. We're looking back at March 17th, when the session was all about a photonics milestone and a geopolitical jolt in oil. As always, if you have questions, you can reach us at stockalpha.ai.
Lovely to be here. Yeah, March 17th felt like two different headlines fighting for attention. Big tech infrastructure news on one side and a sharp oil move on the other. Quite the mix.
Exactly. Let's lead with the tech story because it's the one that could actually change how data centers are built over time. Poet Technologies and partner Lessengers announced work on a 1.6 terabit 2 by DR4 optical transceiver prototype aimed at hyperscale AI clusters.
1.6 terabits in that compact form factor. That's a big sounding headline. But hold on, spell out for listeners what this actually does in plain English.
Sure. At a high level, wafer-level photonic packaging, that's what Poet is focused on, means bonding tiny optical components directly to silicon and fiber substrates at scale. It lets you move more data with light inside racks and between servers, using less power and generating less heat than copper wiring.
So in everyday terms, you cut down on the overheating and the power bills when you train massive AI models. Sounds sensible. I mean, when you step back and look at this, optics have been the promise for years.
Right. The practical piece that Poet and Lessengers showed is a concrete module, the 1.6 terabit transceiver that speaks to density and power efficiency gains. Analysts are calling this a real technical milestone because it hits multi-terabit aggregate bandwidth in a small footprint.
But, and it's a big but, there's always a but, the skeptics jumped in pretty quickly.
They did. Analysts pointed to yield issues, testability at wafer scale, thermal management in dense packages, and the cost of retrofitting current server and switch ecosystems. So even if the module works in the lab, scaling it to thousands of units is another story.
Yeah, that tracks. So it's a case of technical proof of concept versus manufacturing reality. One proves the physics, the other proves whether it's a market story.
Exactly. Optimists highlighted the partnership and the demo as signs the industry is moving from lab to data center. Skeptics reminded everyone to watch for shipment volumes, yields, and OEM approvals. That's the adoption checklist.
Quick reaction. Watch hyperscalers and switch makers. If those folks start buying, this becomes far more than the demo.
Spot on. And to add to that, and this is important for longer-term allocators, analysts said to monitor cost per bit parity with electrical links and plug-and-play compatibility. The tech has to drop into existing architectures without a gigantic systems rework.
Right. No one wants a shiny new module that needs a forklift upgrade to their data center. Not practical, not cheap.
Moving on to the other big headline. Oil. Crude jumped about 4% intraday after doubts surfaced about a US-backed plan to secure shipping through the Strait of Hormuz. That's a classic geopolitically driven supply risk premium.
The Strait of Hormuz is one of those choke points that, if you whisper about it in financial markets, people start moving money. A 4% move for oil in one session materially changed short-term break-evens for energy producers.
Traders and allocators saw that as a reminder that episodic shocks can swamp a muted macro backdrop. Speaking of which, markets were cautious around the Fed meeting. The SPY was up about 0.2% in pre-market trading, and flows suggested modest rebalancing ahead of policy.
So the overall tape was calmish, but pockets of high conviction moved sharply. Energy on one side, niche tech on the other. That's the day in a nutshell.
And the number that really caught our eye was that 1.6 terabit transceiver. It's tangible. It's not just a press release saying we're thinking about optics. They revealed a prototype.
Tangible demos matter because revenue follows engineering credibility. Though again, the timing of that revenue is uncertain.
Let's talk about why optical interconnects matter. In plain English, electrical copper lanes struggle as AI clusters scale because they use a lot of power and produce heat. Optical links use light to carry signals, so you can get much more bandwidth per port with lower power per bit. That's the structural reason people keep coming back to optics.
And the trade-off is manufacturing complexity. You're swapping a really familiar, cheap, well-understood process for something that needs precision bonding and new assembly flows.
Yes, manufacturing yield and testability at the wafer level are the gating factors. If you don't solve those, the per-unit cost stays high and adoption stalls.
Short reactions. Right. Good point.
There was another tech item worth flagging: quantum. Q-Blocks and Riverlane announced an integration. Riverlane's Delta Flow real-time quantum error correction married with Q-Block's control electronics. Analysts called it an engineering milestone for lowering logical error rates.
That one's a slower burn. It's meaningful for the roadmap to fault-tolerant quantum, but the market didn't move much because there aren't immediate commercial metrics attached.
Right. Important engineering step, but not something that changes revenue trajectories tomorrow. Technical milestones often precede commercial impact by quarters or years.
We should also flag the corporate filings noise today. A cluster of 8Ks and amended filings created notifications to watch. Officer departures, operational updates, Reg FD disclosures. For event-driven players, that stuff can produce big moves in small caps.
Yes, governance and accounting items in 8Ks can be precursors to idiosyncratic swings. Analysts said investors should scan item-level detail, like Item 2.02 for operational results or Item 5.02 for officer departures, because those are the parts that matter.
Now, let's pull this together for different market participants. First, long-term tech allocators. The Poet news reinforces the structural case for AI infrastructure upgrades, but analysts emphasize watching commercialization metrics. Shipment volumes, yield improvement, OEM partnerships, those are the ones to monitor.
Second, active sector traders. Today's oil spike showed how quickly geopolitics can create sector-specific volatility. Expect intraday whipsaws in commodity-related equities and spreads.
Third, event-driven and governance watchers. That 8K cluster is a reminder to comb through filings. Small items can cause big price moves in underfollowed names.
And fourth, portfolio risk managers. Combined Fed uncertainty with episodic shocks, and the advice was to keep liquidity buffers and stress test for both policy surprises and concentrated supply disruptions.
So, what should listeners monitor next? For AI infrastructure watchers, track shipment volumes and yield numbers from Poet and partners, and any OEM or hyperscaler validation. For macro watchers, keep an eye on diplomatic developments in the Gulf and the crude term structure to see if that oil move sticks.
Also watch Fed communications. With markets cautious ahead of the meeting, guidance on the rate path can re-accelerate volatility. And keep scanning 8Ks for material governance or accounting items.
Quick two-line reactions. Interesting demo. Cautious scaling. Yep.
To sum up, here are the takeaways. 1. Poet's 1.6 terabit transceiver is a concrete technical milestone, reinforcing the structural logic for optics in AI data centers. But adoption depends on yields, cost per bit, and systems integration. 2. Oil spiked about 4% on Strait of Hormuz risk, reminding markets that geopolitics can rapidly reprice commodity exposure. 3. The Fed meeting created a cautious backdrop, making concentrated thematic moves more likely to drive relative performance in the near term. 4. Technical milestones like the Q-Blocks Riverlane integration matter for roadmaps, even if commercial impact is distant. And 5. Scan 8Ks. Governance and operational filings can create idiosyncratic opportunities and risks.
Yeah, nicely wrapped. Analysts note momentum and engineering progress, but they also highlight execution and macro risks. All informational, not advice.
Correct. This is analysis for informational purposes only, and not personalized investment advice. We didn't recommend buying or selling anything.
Final short reactions. Thanks for listening. Great discussion.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. And again, if you have questions, you can reach us at stockalpha.ai.
Cheers. See you next time on Alpha Recap.